Hey guys, so in this video I'm going to be talking about supply and demand zones. So when it comes to drawing supply and demand, there's going to be a few differences between supply and demand and support resistance, as well as a few similarities to it. However, supply and demand zones are very powerful, and there's going to be some benefits to using them. So first off, when we talk about support resistance, we're usually talking about something that is going to look like this. We're going to see price moving back and forth, making equal highs and making equal lows. And then of course, every now and then, we know that price will break the area of structure. It'll either pull back and it will continue up, or price will spring above the area of structure, just like we talked about in the Wyckoff video. It will come down, pull back, and then it will come down here, either follow through, or from that area we'll see a possibility of price coming back up. So the difference between supply and demand and support resistance is that there's a lot of what we call liquidity built up among both sides. So there's going to be liquidity pools, there's going to be money residing on both sides of these forms of market structure. So when we're talking about supply and demand, it differs in the sense that supply and demand usually is not built up as support resistance is. Supply and demand is based around you actually looking to catch a strong directional move. If you're looking to trade support resistance, it's usually going to be back and forth movement, or maybe retest in a certain direction. So when we talk about supply and demand, let's say the market is trending down. The market's trending down and it goes ahead, right, and it gives you one strong, let me redraw that. The market's trending down and it gives you one very strong candle, and it wicks off, pretty strongly, and then we come up with some bullish movement. What we're going to be looking at here is not going to be this area, right? Let's say price pushes back up and then it comes down for a pullback, and then it continues back in this direction. When we're looking for a demand zone, and really quick, demand equals buy, supply equals sell, right? D equals B, S equals S. Just wanted to throw that out there. So right here is going to be what we call a demand zone. This is going to be possible support. Okay, this is going to be possible support. However, this possible support is not going to be your demand area. What you want to do here is you want to look at your areas where your wicks have shown rejection, and what this is telling you is that in the past, price failed to actually close anywhere inside of this zone. So you'll be drawing a box around those wicks, right? You'll be drawing a box around those wicks, and instead of looking for price to retest this zone as a whole, you'll usually be looking at it to retest the top of it and then continue back up, right? Same thing with supply. If we see the market is moving up, and all of a sudden we have a pretty nice bullish candle, we wick off of that very strong, we show this little bearish candle, we come down a little bit, you're going to be drawing this area out as possible supply for price, where the wicks have shown rejection, and this could be a possible area of value. So the thing I really like about supply and demand is that if price does not come pull back that deep, then you'll usually be fine. You don't even have to take a trade. So the upside to this is you have a bit of an edge over the market, as most people are buying right away on support resistance. You can use supply and demand as possible entries as well as extra confirmation. So I have an example right here on AUD/USD on the 1 hour time frame. And just really quick, I want to go ahead and draw out this area. So all we're going to be looking at is we want to identify, this is on a 1 hour time frame, we want to identify where price has reacted. Okay, so if we come over here, we want to draw a zone, and we want to name this 1 hour demand, right? It's going to be our demand, 1 hour demand zone. This is going to be our demand because we are anticipating price to continue up after retesting this level, right? So what we can actually do here is we can go ahead and even sometimes draw a trend line And we want to ask ourselves, are we trading the trend line or are we trading horizontal levels? I recommend trading horizontal levels and only using trend lines as extra confirmation. So this 1 hour demand zone, what we notice here, by using this level, we aren't entering on a built up level of liquidity, because we know if this market was to retest multiple times, it's basically accumulating orders. So our goal with supply and demand is to catch fresh levels of price. Okay, so that's what we have going on. What you want to do is you want to mark it out, I guess on a 1 hour time frame, but you can mark these out on every single time frame. You see how we have this form of resistance here, not resistance, this little wick here. You could draw that out as a possible longer term demand as well. So what you can do actually is you could come up, and then we'll let the markets do its thing, and you're gonna look for a retest to that actual demand zone. So as we can see right here, price perfectly tapped this area of demand. So through this movement of price, realize that price pushed up, it gave us a fair pullback, and then it topped out around this area. So what we are now doing, we know that when a double top occurs, we'll usually be building some type of liquidity, right? So this is going to be liquidity, and then I'll go ahead and caption this or put it in quotes, double tops. Okay, that's the reason we're going to have liquidity there. We believe that there are many retail sellers looking to short this double top movement. And then if we also come over here and look into the past a little bit, we can draw this trend line, and we know that many people are looking to sell this trend line. So by buying on this demand zone, we are going to be targeting that retail liquidity above, right? And from there, we can use extra confluence, and we can even target this as a mastery candle, right? Previous area of structure, we broke below, came back up, made new market highs. So from that point, we can maybe even look at the 5 minute. We'll come back up to here. Actually, let's look at the 5 minute. Okay, from this point, we're going to take our Fibonacci from the low all the way up to the high, and we are going to look to enter on the 0.5 level. 50% retracement. Targets, first target is going to be the 618, and then aside from that target, you're going to want to look in the past, and you can even target these levels here, right? So this is going to be your first area of liquidity you're going to look to capitalize on, and then other liquidity is going to be over here, and then you can target this high as well if you really wanted to. So what we have going on here is a fresh area of demand. That's what we're aiming to get our eyes on. We're aiming to get in the markets in a spot where we do have potential reaction. So our goal here was to identify this area in the past where price rejected off strongly, and we wanted to use enough confluence to realize that price might not push all the way down for a double bottom, and instead it might reject right away. And typically when using supply and demand, if price rejects right away, it's going to go a decent amount of time. So from this point, we can press play. We can see, boom, so we're now in the trade. So at this point, we're now entered, and all we have to do is monitor. So there we go. Very clean entry, and then we are first right through the targets. Next targets are going to be this form of liquidity. And that was a beautiful trade, right? And then your third form of liquidity, looks like we weren't hit fully, but you could overall say that this was about a 5.98 risk to reward ratio, which means you only risked 4 pips for this trade setup and you made 25 pips. So remember, I try not to focus too much on the pips, try to focus more on the percentages. This is about a 1 to 6, so obviously we know 1 to 6 with percentage based risk. If you're risking 2%, that's 12%. That's a monthly goal on that trade, right? So next, another opportunity here on AUD/USD. So if we look here in the past, right, see this area of rejection, this is going to be 1 hour demand. So when you're drawing this area out, let me come back up to the 1 hour really quick. Okay, let's go back to here. I'm just making sure this isn't the same. It kind of looks similar to what we have going on here. I don't believe it's it though. Let's make sure really quick. Yeah, this is a different let's see. Just making sure that this price isn't the same. Okay, this is actually during completely different times. Right, so here we go. We're gonna go ahead and go through this setup on AUD/USD. Wait, it's actually the same setup. Okay. Well, I see what's going on here, man. So now we're gonna go. I'm sorry, I'm just waking up. I was a little confused at 6:44. But yeah. So next, what are we gonna be talking about next? Let's go check out this area on USD CAD. So USD CAD on the 1 hour time frame, we did show some reaction here on this pair. All you gotta do is you wanna map this level out, and keep in mind that you're gonna have areas of supply and demand on every single time frame. Okay, what you want to do, and you're gonna have a lot of them. You're gonna have a lot of areas of supply and demand. Is you just want to map this area out and just leave it there. You don't have to continuously, map out key levels and overcomplicate it. You want to look for that initial rejection that pushed us up. And you see how this was the main rejection and we failed to break this high. We can come down and we can ask ourselves, is price going to reject off of this demand? So once again, 1 hour demand. Second, 1H demand. So we can go ahead and bring this back. You can go ahead and drop that right here, and then from that point you can work your way down to the lower time frame. Very beautiful entry, mastery candle. If you want a closer look at things, like I said, you can always work your way down to the time frames, lower time frames. Fairly clean W, right? What type of W is this? This is going to be a manipulation W. Why do we say that? Price pushes down, and actually let me get my different arrow. Price pushes down, it rejects, it comes up, it makes a new low, and then it springs all the way up to new highs, and then we pull back, right? New highs relative to this previous pullback, which is a good sign for us to go long. So we have, an extra form of confluence being this 1 hour demands right here. So, without having the demand zone drawn out, we wouldn't realize we were on a clean level of structure, right? So all you have to do here is you want to go ahead and get fib retracement all the way from that low all the way up to the high, and then once again you want to go long. You didn't take profit. 618 will be targeting these equal highs, and this is going to be for the short term. Of course, maybe able to target better for the long term. And all we're going to do, entry, and now we're beginning to push to the upside. So my stop losses were fairly tight on this trade setup. That was super clean, but my stop losses were very tight. If you felt more comfortable going conservative, you could have, but remember our mindset in terms of what this move is. Our mindset is that this is a liquidity grab. This is the manipulation. So, I don't really expect price to come back into this area. Okay, so that's what we have there. That's another form of demand here on USD CAD. Okay, we have USD JPY next. Let's go ahead and go to bar replay. And what do we see happening here? Very nice wick showing a change in directions. When you're looking at supply and demand, what you want to do is you want to map, what happened before, and then what happened once this potential area of demand was made. So the thing about using supply and demand is that we don't know if this is we don't know if this is demand yet. Okay, we're waiting for price to come back to it. And our goal is to catch the freshest level possible rather than drawing out a zone and wait for a couple retests. So 30-minute time frame, we have price retest in this area, and then boom, major rejection. So what this is telling us is this is giving us a little bit of confirmation here. So we want to examine this, and we really want to watch it from the lower time frame. Okay, That's what we want to do. So there's some possibilities here. There's some possibilities here. If we come down, we can see that this is a very clean W. This is another manipulation W. And you would have took Fibonacci from here to here. And as you can see, 50% retracement, showing us major rejection. And then we also want to look at this level. So this is the difference between support resistance and supply and demand. What we're looking at here is support resistance. What we're looking at here is a demand of price. And then from that level, you can see if we still get a pullback, but boom, we take off. We take off from that level. Absolutely flying. So next we have gold. Actually, I don't think I found a setup on gold. I'm just gonna keep scrolling through AUD USD as a couple of examples. So let's go ahead and see if we can find something else. Right here on this wick. See how we had major rejection? This can be a potential area of demand. Remember, it's only an area of demand once you see a possible trade coming from it. You can go ahead and draw this area out as well. And keep in mind, when you have two areas of demand, let's go to 1 hour. Every now and then you'll see something like this play out, and I'll show you guys in a second. Every now and then you'll see price spring down. Sometimes it's coming to another form of demand, push back up, and then they give us that pullback for the continuation to the upside. So remember, all we're doing, I like using the hourly time frame the best. You guys can use whatever you want. Rejection, coming down for another pullback. Once you approach this zone on the lower time frame, you're simply watching it. Okay, so you might have to come down to like the 15-minute. And what do we have here? Right, previous level. Let's go ahead and rewind this. See if we can work our way down to the 5-minute and check that out. Normal W formation occurring. Fibonacci from the low to the high. And then 618 is going to be right here. Go ahead and move stop somewhere around here. Targets are up here. Boom. And it's like that. It's just like that. So aside from that target, 618, you can then target these previous highs. And as you can see, high demand for price combined with these M's and W's as well as the mastery patterns. Very, very powerful. See what we have as well. Look for a couple other setups here. And in the next video, I'll go ahead and cover the supply zones, which are basically going to be the opposite. So see what we have here. Right, just major area of price. We see price wick off very strongly here. But then rewinding, and even if we don't know that price is going to come back up yet, we're simply coming to the 15-minute, 5-minute, whatever you prefer, and we're gonna want to see what happens. So boom, W formation. W formation. Then we have rejection off of the 50% retracement. And then we're taking off. A little bit of consolidation on this pair right now. Okay, so we can go about entering on this pullback. And there you go. From this area, we had about 100 plus pips of movement. Come back up to the higher time frame. Let's see what else we got. Right, here's another area. This wick was very, very strong. Draw this wick out. You could then rewind it. Come over here, 5 minutes / 15 minute. Looks like we'll only go to the 5 minute for that one. Here we go. Oh, this is the one before. Should be coming up here soon on USD. Oh, it looks like we don't have that actually on TradingView. It won't let us go back that far. But here's another one. Right, very strong reaction to this area of price. All you gotta do is come over here and rewind it. Potential demand zone. 15-minute time frame it is. What do we have here? Potential mastery setup from this area here. Pushing price back up. And that was insane. And then from that, we have an M formation. Okay, we have an M formation. Yeah, so this market was very strong actually. We didn't get any pullbacks. We had a solid W, no pullback. Solid M, no pullback. So that's it for demand zones. In the next video, I'm going to be walking y'all through supply.